and welcome to United Spirits Limited first quarter FY24 earnings call. Today on the call we have with us our Managing Director and CEO, Ms. Hina Nagarajan, who is joined by our CFO and Executive Director, Mr. Pradeep Jain. Hina will start by providing an update on business performance during the quarter, while Pradeep will run you through the financial performance during the period, post which we will open the floor for questions. With this, I hand over the call to Hina for her opening remarks. Over to you, Hina.
Thank you, Shweta. Good evening, ladies and gentlemen. Thank you for joining us on the Q1 FY24 earnings call of United Spirits Limited. Before we begin today's call, I would request all of you to join the Diageo India team in observing a 1-minute silence to honor Sir Ivan Menezes, who led Diageo PLC and played an instrumental role in its transformation since he took over. He was more than just a CEO. He was an inspiration and a mentor. He was a true believer of our purpose and led by example by celebrating life every day, everywhere. And we thank you all for your thoughts and messages during this period to the Diageo India family. We truly appreciate it.
We now request all participants on the call to observe 1-minute silence, please. Thank you. And over to you, ma'am.
Thank you. Thanks to all of you. The last 45 days indeed have been very tough for all of us at Diageo around the globe as we mourn the loss of Ivan. Having said that, we have picked ourselves up exactly as Ivan would have expected us to. Before I talk business, I would like to draw your attention to our press release, where you would have observed that we have introduced our consolidated performance for the first time. This has been on our minds for a couple of reasons, and we have opted to make a clean start with this in the new fiscal year. Firstly, we have now optimized our legal entity footprint, and Royal Challengers Sports Private Limited, RCSPL as we call it, effectively, is the only operating subsidiary. Second, RCSPL is now also growing in salience, especially on earnings driven by the new media rights cycle that has kicked in from the just concluded season. Therefore, it makes imminent sense to start talking about the consolidated and standalone performance going forward. Let me start by giving some context on the macro environment as we are seeing it. Things largely remain steady vis-a-vis the last quarter. Consumption was resilient in the April to June quarter, and India remains a bright spot in an otherwise volatile global macroeconomic environment. We don't see any major risks to discretionary spends over the short to medium term, especially since the penetration for our category still remains very low. Q1 is the lowest quarter for our business, but on a relative basis, we have performed strongly in the P&A business, while the popular segments remain under pressure. That said, our trademarks are performing competitively within the popular segment as well. However, recent news on duty increase in our home state is not very welcome, given the fact that duties are already on the higher side in Karnataka and demand was already under pressure. Coming to the performance for the first quarter, we have delivered strong double-digit growth both in the P&A segment as well as overall net sales. This provides us the confidence that our strategy and the virtuous cycle we have of productivity fueling brand investments and that fueling top-line growth is working, and it reinforces our commitments to future-backed consumer-led approach to business. I'm also happy to inform you that with this quarter close, we have successfully wiped out our accumulated losses. Briefly now on the key portfolio updates. On the first anniversary of Godawan in May 2023, we introduced Godawan 100, which is a bespoke 100-bottle collector's edition, handcrafted luxury single malt that pays homage to the great Indian bustard, popularly known as Godawan. With only 100 bottles produced, each bottle is different, is made with utmost care. Every bottle has a unique etching of the Godawan on it, one of the attributes that makes it a collectible. We have received great response on Godawan 100. All bottles were sold immediately, and we fetched upwards of rupees 90,000 per bottle. This is really encouraging for us from a brand equity viewpoint. Separately, we have expanded Godawan's reach, and it was launched in New York City and New Jersey in May 2023 through an immersive experience at an acclaimed Indian restaurant in New York. Godawan is currently available across 40-plus outlets, including trend-leading outlets like Bar, Junoon, Gupshup in New York and New Jersey. Royal Challenge American Pride is now present in 80% plus national salience markets across the country. In the current quarter, we have expanded our reach to Orissa and Chandigarh. We are engaging a lot in focus activations on the brand. Our association with the Backstreet Boys concert in May 2023 helped us to bring the world of America closer to our consumers, delivering 30 million plus impressions on social media, and helped to connect with 22,000 plus consumers at the concert itself. Our other consumer-centric activations, such as participating in major food festivals and bringing the American lifestyle to life with camper vans, has also been very well received. As mentioned earlier, we are positive that this will be our quickest 1 million case brand. Our completely renovated bundle of antiquity has reached now close to 50% of the salient markets. We are receiving very positive reviews from retailers and consumers alike. Our renovated Royal Challenge whiskey continues to expand its footprint, and we are happy with the way it has responded and enabled overall momentum on the trademark. Johnnie Walker Blonde was our biggest ever global innovation launch in the premium portfolio. India was one of the first markets alongside Thailand and Brazil for the launch. It is now available in 9 states across the country. Our immediate focus will be to enter new geographies and continue to scale up distribution and visibility in the launched markets. Driving liquid on lips through a differentiated serve, along with event partnerships and on-trade activations, will continue to be the key levers of building this brand. Delighted also to share that the earnings from men's IPL season have stepped up significantly as we have entered the new 5-year media rights cycle for the period 2023 to 2027. This reinforces our confidence to reap the benefits of our investment in the Women's Premier League over the longer term. As articulated in the media release, our sports business is truly aligned to our core purpose of celebration and gaining salience in our consolidated earnings portfolio. The multi-year supply chain agility program announced earlier in the calendar year, which aims to strengthen our end-to-end manufacturing footprint, is also on track. We are also progressing well on our ESG journey and on track to achieve Society 2030 goals that we have set for ourselves. Towards this, I'm really, really proud to share that we have not only overachieved our water replenishment target by 25% in volume terms, but we are also 3 years ahead from the originally set timeline. So we have achieved our target in 2023 versus the target deadline of 2026. Separately, we have committed to replenish the mangrove plantations in Orissa to restore the delicate natural balance of the coastal regions for climate resiliency. In addition, we have collaborated with Alwar District Forest Department to expand the forest cover by committing to plant 2 lakh trees in the next 3 months. All of this, in turn, is helping us to expand our green footprint and reduce Scope 3 emissions in line with our commitment to reduce the overall carbon footprint under the Society 2030 goals. Touching briefly on awards and recognitions for our brand, Black Dog Redesign won a coveted gold at the DBA Design Effectiveness Awards 2023. Godawan Artisanal Single Malt received a silver for packaging design at the 25th Fab Awards. These are only a few. Actually, Godawan has received almost 7 awards in this quarter. Looking ahead, our focus is on continuing the accelerated growth momentum that we have now established, taking our renovation and innovation offerings to their fullest potential, and continuing to work on the longer-term consumer foresight-driven pipeline. We have significantly ramped our capabilities in areas of distillation, maturation, innovation, and consumer insights. This, along with enhanced use of digital tools and renewed focus on effectiveness of sales and marketing, is making us future-ready. With this, I hand over the call to Pradeep for an update on the quarter financial performance. Pradeep, over to you.
Thank you, Hina, and a very warm welcome to all. As always, it's an absolute delight to interact with all of you. Before calling out the quarterly financial performance highlights, we'll request you all to refer to the results press release posted on our website last evening. As already mentioned by Hina, we have, for the first time, introduced consolidated financials in the press release. We haven't yet added all the details as we are already publishing rebased and reported numbers, and we did not want to add to the clutter. We will start adding the necessary consolidated financial details once we have a clear base from Q3 of the current financial year. By now, all of you would be quite familiar with the terminologies used in the document. The first one is reinstated, wherein all numbers are adjusted for the Pioneer Distilleries merger as it is effective April 2021. Therefore, for the previous periods, the numbers reflect the merged entity. Current period reported numbers are already inclusive of PDL. That makes it comparable. The second term that we have been using for the last 2 quarters is rebased. This is eliminating the impact of the strategically reviewed popular portfolio from the base year to make comparisons meaningful and absolutely like-to-like. This hopefully provides all of you with a better understanding of the organic business performance. We have started the new fiscal year with a robust quarterly performance, both in terms of P&A and overall NSV growth. Price mix remains strong, driven by continued premiumization focus, headline pricing, and revenue growth management initiatives. Lower prestige and popular segments remain under pressure, driven by consumer inflation impacting the lower SEC consumer and the high headline pricing in the popular segment. Like for like, we have delivered an overall portfolio NSV growth of 17.4% during the quarter. P&A growth stands at 21.2% with strong double-digit growth in our Scotch portfolio. Reported gross profit was 947 crore rupees with a reported gross profit margin of 43.6%. Excluding the one-off benefit, core gross margin was at 43%, reflecting the continued sequential improvement. Our marketing reinvestment rate during the quarter was 6.8% of net sales. A&P is an extremely critical component of our virtuous growth cycle, and we will continue to invest in A&P to drive sustainable, profitable growth, ramp up equity of our brands, and overall build brands that are aspirational and iconic. EBITDA for the quarter stands at Indian rupee 385 crores, and reported EBITDA margin is at 17.7%. Excluding the one-off benefit of Indian rupee 13 crores, core EBITDA margin was at 17.1%. There is an exceptional charge of Indian rupee 17 crores on account of the ongoing supply agility program. Overall, our reported PAT for the quarter is at Indian rupee 238 crores with a PAT margin of 11%. We can now open the floor for Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles.
Okay.
Our first question is from the line of Jay Doshi from Kotak. Please go ahead.
Sure. Hi, good afternoon. Thanks for the opportunity and congratulations on a good set of numbers. I've got a couple of questions. The first one is, now this is the second consecutive quarter of double-digit volume growth in P&A, much higher than your guidance of 4 to 6%. So I'd like to know what is driving this and whether this is sustainable for a few more quarters.
Hi, Jay. Thanks for the question. So I would say, Jay, it is robust in the quarter, and there are a couple of factors. I think the 100% normalization of BIO, as you know, we were out of the market, some key markets for a while, and we were normalizing since the previous quarter. The 100% normalization has happened in this quarter. And I would say the bigger reason is really the ramp-up of our innovation and renovations, right? We've done quite a few. And as I mentioned, now, Royal Challenge, Signature, these are all now in 80-90% salience markets. So that ramp-up has also given us some volume benefit over the previous quarter. We expect this to now normalize in line with our guidance going forward. So, a few one-offs in this quarter driving that.
Thank you. Likewise, on profitability, I really looked at the numbers. So some of your cost line items, for instance, employee cost was lower than the normalized level, and A&P, that is seasonality. But does this quarter give you confidence of surpassing 15% this year, or you think we should still work with 15% for now?
Yeah. So,
I would say, I think basically, if you look at it, A&P, as you rightly pointed out, is lower, right? And I think if you sort of normalize, the underlying is about 17.1, and if you, normalize the A&P spending to what our guidance is, 9 to 10%, you're talking another 2.5 off. So, I mean, our real, the way to look at it is we are probably at about 14.5 EBITDA. So like we said, our first target is to sustainably reach 15%. And, we take it from there. Right?
That's helpful. Just one final bookkeeping question or, for the benefit of everyone. What is the impact of recent tax increase in Karnataka, if you could explain us, because, media articles are at times quite confusing when it comes to taxation.
So, like I mentioned, Jay, I think this was not a welcome tax increase, right? I mean, the tax rates in Karnataka are already much higher, and what we've had is a 20% tax increase, which in effect means that MRPs of our brands will likely go up in the range of 14 to 17%, so become even more expensive in the states than they were already. It's too early, I would say, to call out impact on demand, but I mean, our experience suggests that there is generally a negative impact when prices go up so much. I mean, post divestment of our popular business, the saliency of the state for our popular portfolio has reduced substantively. But, popular was already under pressure, because of the consumer's wallet under pressure with inflation. So difficult for me to call out quantum of impact, but it's definitely an area for us to watch.
Effectively 14% increase in MRP without any increase in net realization, and it is across all price points.
Yeah, Pradeep?
Yeah, by and large, yes, that's what, right? So no realization improvement for the manufacturers and the brand owners. It is effectively the government just taking the revenue.
Understood. Thank you so much, and wish you the very best for the coming quarters.
Thanks, Jay.
Thank you. Our next question is from the line of Percy Pantaki from IIFL. Please go ahead.
Hi, team. Congrats on a good set of numbers. My first question is on the employee cost. I think earlier the expectation was that it would be in the range of about 140 to 150 crore per quarter. But now this is the second quarter in which it is in the 120, 125 kind of band. So is it that you have really done some work in terms of reducing the employee cost post the popular portfolio sale, and now 125 seems to be a more sort of reliable figure on a quarterly run rate basis?
Yeah, so Percy, absolutely fair question. Look, we will maintain our original stance of look at the 4-quarter averages, right? I think that will give you a reasonable sense of the number, right? And there will always be quarterly variances, right, on account of, actuarial valuations, retirals, et cetera, right? So we maintain the number, the true number to be, just look at the 4-quarter trailing average. I think that will be the right number.
Okay, so the 4-quarter trailing average is about 140 approximately. Okay, thanks. Second question.
Our cycles are, the annual increment cycle comes around September, October, etc. So that's what will start kicking in broadly.
Understood. So second question I want to ask you is that is there now, compared to pre-COVID period, is there now a permanent change in the phasing of the primary sales across the 4 quarters? The reason I am asking this is that pre-COVID Q1 used to be about 23% of the annual sales. And now it has come down materially. It's around 20 to 21% of the annual sales last year. And Q2 has sort of increased its salience now versus what it used to be pre-COVID. So is this sort of a permanent kind of a change in the phasing of the primaries, or is this just some sort of vagaries? See, the reason why I'm asking is that if basically I take a normal YOY growth in Q2 this year, then the sequential growth will be significantly ahead of what it used to be pre-COVID. So the question is in light of that data.
So let me take a shot at that.
Pradeep, you say that, and I'll add if necessary.
Yeah, then you can add, right? And again, pardon all of us, both of us are on different locations, right? So just pardon us for that. So, Percy, look, I think you've hit a very, very important point, right? And our perspective on this is there is a little bit of a shift as the salience of the top-end brands increases in the overall portfolio. There is a little more nuanced seasonality to that part of the business, right? So what do I mean by that, right? Honestly, we have not looked at it so much from a quarter-on-quarter basis, but I think for us, the July to December and then the Jan to June, those are two very, very relevant distinct halves, right? Because in in July to December, you are selling into the season and into the festive period, right? So therefore, that's a very, very distinct half, right? And then a Jan to June, you are kind of drawing down, etc., your inventory levels. So you are right. I think pre-COVID, the seasonality between these two halves used to be, if I remember, 51-49, right? I have some broad numbers in my head. And post-COVID, right, as the salience of the top-end portfolio has increased, this number has moved more towards 54-46, right? So 54 in July, December, and 46 in January, June, right? I hope that answers, right? Because and the simple reason is the top end of the portfolio is more driven by festive season, etc., etc. So it's a lot more skewed towards the October, November, December quarter, and a little bit in January.
Very, very helpful, Pradeep. My last question, if I may, is on the other expenses. And again, I ask this because post-hiving of the popular portfolio, we are still grappling in terms of what is the sustainable number here. So in 3Q, 4Q, you had a number of about 325 to 330 crores. In Q1, again, it has dropped materially to 290 crores. So is there sort of any one-off saving in Q1, or is it that your plan of cost saving in terms of reducing manufacturing locations, etc., is playing out well? And if that is the case, then probably this lower number is something which would be sustainable in future as well.
I mean, this is the entire other expenses. Look, Percy, it's a combination of variable and fixed, right? Very, very top line, 60% of that base is variable expenditure. So that should swing pretty much in line with volume, right? Obviously netted off with whatever productivity, I mean, inflation and productivity that we drive. And there is a fair amount that sits in that chain. So therefore, there is inflation also and we drive productivity also, right? And the balance 40% is largely fixed corporate overheads, etc., on which we do derive operating leverage, right? So therefore, I think that's the broad sentiment that I can provide, and hopefully the numbers will kind of fall into a reasonable logic based on this.
Right. That's all from me. Thanks and all the best.
Thanks.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. The next question is from the line of Concall from FY2023-24. Please go ahead.
Hi, good afternoon. Thanks for the opportunity. And congratulations on a good set of numbers. My first question is on the other expenses. And again, I ask this because post-hiving of the popular portfolio, we are still grappling in terms of what is the sustainable
Our next question is from the line of Jeetu Punjabi from EM Capital Advisors. Please go ahead.
Thanks. Hina and Pradeep, I thought the numbers were really good. Congratulations. So 2 questions, right? Just from the sense you're getting from what you've achieved this quarter as well as what you're sensing in the market in general, do you kind of feel that this year-end and this season would be a very, very good season for you guys, just based on the plan that you're working towards?
Hi, Jeetu. I think great question. Jeetu, we have seen robust sort of, the premiumization consumption continues in the, mid, upper and, the higher ends of the market. And, I think if you look at on-trade socialization, if you look at the revival of global travel, all indicators are that the season will be good. The pressure, if any, is only at the lower end, right? Popular and, the bottom end of prestige, where I think consumers are feeling the pressure on the wallet. And that has been slow for a few successive quarters, though our McDowell's and our brands are performing competitively. So no reason to believe we won't have a good season. I think we will have a good season as we go into the festive season.
Okay, wonderful. The other question is, it's fantastic again to see you giving consolidated numbers and putting in the cricket franchise into the overall accounts. My question is, I also heard that you've now wiped out all your accumulated losses. Is that going to translate into the company start paying out dividends and cash flows going to be going into shareholder pockets over thing? And 2, is there anything else you think you'd be doing as you access the cash flows from the cricket franchise?
So, Pradeep, you want to take that?
Yeah, I'll take that. Yeah. So, Jeetu, we have stated this earlier pretty consistently in our calls, right, that, once the mothership, which is USL, wipes out accumulated losses, we would want to come out with a formal dividend distribution policy. We are working on that, a few scenarios, etc. And hopefully, over the next 3-4 months, we will issue out a formal dividend distribution policy, right? And then all of you will have access to this. So therefore, yes, the simple answer is we would want to get back into dividend distribution ways, right? Now, having said that, we continue to explore any opportunities, etc., for growing our business for the longer term, etc. In case that comes, obviously, we have the cash and the leverage ability on our balance sheet to be able to do both, right? And that's what we would want to do.
Okay, super. Thank you. Good wishes as always. Keep chugging.
Thank you, Jeetu.
Thank you. Our next question is from the line of Abneesh Roy from Nuvama Institutional Equities. Please go ahead.
Yeah, thanks and congrats. Good set of numbers, including from IPL. So wanted to understand in IPL now all the key teams are doing well. In fact, in Q4 you won the rights for the women's IPL team also. So if you could share over a longer time frame, how would you see the revenue and the EBITDA scale up from both the teams together? I'm not asking for any specific guidance, but just the way men's team is now doing so well, would you expect that the women's team overall over a longer time frame will also be quite profitable?
Let me ask our cricket enthusiast, Pradeep, to answer that question.
Okay, super. No, so Abneesh, like Hina mentioned, my response will be more as a cricket consumer, right, and not as the CFO of USL. Look, I think our bet is on cricket and the women cohort, right? That's what we have to fundamentally believe in. Even if you look at the trajectory of the men's IPL, the first 10 years were an EBITDA loss-making proposition, right? But at that point of time, no one thought that the media rights will reach the scale at which they will reach, right? What the men's IPL trajectory reinforces our confidence is that at some point of time, the women's cricket will also hit that inflection point, right? And that's what we are backing on. And so far, there is nothing that is kind of pointing to the reverse on that, right? So therefore, we remain equally confident that in 8-10 years' time, etc., women's cricket will also, hit that inflection point, and it will be as profitable, if not more.
Actually, you're seeing all the triggers even today, Pradeep. So, if you look at women's cricket, popularity, etc., the metrics are all in the right direction, right? So,
absolutely. Yeah, absolutely.
Yeah.
Yeah. And broadly, I just want to also kind of manage expectations. Look, the RCB P&L gets capped for 5 years, right? The media right auction happens once in 5 years. So broadly, it's a capped P&L. Obviously, we'll continue to drive some accretive, revenue growth management, et cetera, local sponsorships. But fundamentally, it's a 300 crore profit for men's IPL and a 90 crore loss for women's, for women's Premier League. Very broadly, right? And that's the way it will stay for the next 5 years now.
Sure. One follow-up on the cricket-related itself. We are having the World Cup in the coming month. In the past, and given you would be tracking this very closely, would you expect some kind of a uplift because of the cricket-related demand? People would see more in terms of the bonding. So would you expect some kind of uplift because of the Cricket World Cup also this time? It's happening in India. The timing, etc., will be quite suitable also.
We do see, Avnish, we do see an uplift during cricket. I mean, IPL, etc. I mean, it is a very big social occasion, right? So, I mean, we activated Royal Challenge this time around IPL. And it is very much about, people getting in, especially because in-home consumption has become far more normalized after COVID. I would imagine that, there will be some uplift. I don't know, a quantum uplift measure, but definitely it is a very big celebration and social occasion.
So last question, your BIO portfolio now has come back. It's doing well. So if you could update, is it meeting your initial expectation? Second is in terms of market share, when I see clearly it seems that now you are doing far better than what it was 3-4 years back versus your key competitor. Also, your key competitor is embroiled in some of its own legal issues. So I'm not going into that. I'm just asking, what would be your sense in terms of market share and in terms of BIO? Would you be happy with the way things have gone versus initial expectation?
Yeah, I would say yes. BIO has come back as per our expectations. And if you remember, I mean, last quarter onwards, we have started putting, AMP back into that portfolio to continue building the brands. And I definitely, I talked about Johnny Walker Blonde, which is actually really doing well. So, yes, the answer is yes. And the second part of your question, Avnish, was market share. Yeah, I would say yes, we continue to perform very competitively across segments on market share.
Sure, thanks. That's all from me. Thank you.
Thank you, Avnish.
Thank you. Our next question is from the line of Prakash Kapadia from Anived Portfolio Managers Private Limited. Please go ahead.
Hi, Prakash.
Hi, Pradeep. Congrats to the team for wiping off the accumulated losses. That's a big milestone. Could you give us some sense on Delhi market? Have things stabilized? How have growth rates been in the last few quarters? Are they better from where they were? And I had one more question. Media reports suggest bottled in India brands growth has slowed down post the excise policy reduction, where premium and higher brands are growing much faster after the price cut by almost 25-30%. So what are you seeing in some of the bottled in India brands such as Black and White, Black Dog? If you could give some sense, that'll be helpful.
Sure. So, look, on Delhi, no comments on, competition or anything, but in general, because of the route to market change, the market has shrunk for us. And we have stabilized at a certain volume. We are supplying all our brands, but it is, a fraction of what it used to be. And it is stable. Our focus has been on whatever, we lost in Delhi to grow and pick that up in the rest of the country. There's 36 other states or 35 other states for us to do it. So we are focused on that. Actually, our experience is not showing that, just because BIO is growing, BII has stopped. BII also continues to have very robust growth, as does, upper prestige, mid-prestige. So because, like I mentioned initially, the penetration of our category is still quite low. And because this category is now seeing across various segments a lot of innovation, renovation, and, consumers are experimenting much more. So they don't stick to only one brand, but they're trying many different things. Growth across the segments still looks very healthy. And, BIO is not like slowing down the others, right? But we see a lot of upgrades directly or entry directly into the upper category.
Okay. Understood. Thank you.
Thank you.
Thank you. Our next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi, Hina. Hi, Pradeep. Thanks and congrats on a good set of numbers. A couple of questions from my side. First, if you can give some sense on RM scenario and how should we think about gross margin trajectory in the near term from here on?
Yeah. So, Tejas, thanks. Let me take that. Right. So, again, let me cover the two core ingredients. Alcohol, spirit. I think it's playing out pretty much the way we had thought, right? And we had called out three factors, which are unfortunately all headwinds, right? Exactly playing out their role. The ethanol fuel blending policy, the union elections, and therefore the increase in minimum support prices on the feedstocks, and El Nino factor, right? And whatever you are reading is pretty much what is the reality. So therefore, neutral alcohol spirit does remain inflationary. And now we are doing tactical things, right? Right now we are doing tactical things in terms of increasing our physical coverage, going slightly long on physical storage contracts, and obviously the longer-term intervention of increasing our co-location footprint. That as part of the supply agility program is anyway on, and we are trying to improve our grain indexation coverage, right? So that's on neutral alcohol spirit. It does remain inflationary. Okay. Now, coming to glass, again, it is a completely seller's market right now. The glass industry capacity utilization is close to 100%. On top of that, there is consolidation in the industry happening. So therefore, it does remain inflationary. April, May, June has been quite inflationary. If you also remember, the real inflation in glass, right, last year started somewhere around the August-September mark, right? So therefore, we are still lapping low basis of glass in the prior year because we had, our suppliers had longer-term contracts coverage in places. Right, so therefore, the inflation still remains high, right? So we'll have to just watch out. I mean, there is some unwinding. The natural gas was a relief, right? So some unwinding happened on account of that. Soda ash is beginning to unwind, right? So again, we'll have to see how much coverage we have, etc. And the last thing is furnace oil. We do expect crude has come down, but so far furnace oil hasn't yet come down to the levels that we had thought. But hopefully, it does track crude, and over the next 3-4 months, etc., as it comes down, hopefully we'll get some releases, right? So that's broadly the inflation scenario.
Sure. So one follow-up, all the headwinds that you just spoke about were already there in this quarter, or they are actually incrementally picking up pace as we go along?
Actually, all of them to some extent are there, right? Now, El Nino completely has not played out, but we do hear that the Kharif sowing of rice has got delayed to some extent, right? So that will probably play out in the next 2-3 months, but other two are very much playing out.
Sure. And second and last question. Hina, we have seen a lot of state elections recently where freebies have been doled out, and unfortunately, our sector has been the punching bag to foot the bill. Now, we have a good number of state elections lined up for next 12 to 24 months. So, I don't see that trend changing much. So, how do you kind of accommodate that kind of brewing headwind in your projections and numbers and the business plan? And you had also raised this point that you were raising it with government in terms of changing or approaching this problem statement from much more a structural lens. So if you can give your thoughts both on near term and much on the longer term on this point.
See, I would say in the near term, I mean, our experience is that, some play out positive, some play out negative. In the balance, I think we know how to deal with it. And I would also say that a number of states, especially if you look at COVID, I think there was one instance where a number of states put out, COVID tax on the category, and the category shrunk massively in these states, and then all states, very quickly retracted the tax, right? So I think state governments also have the experience and understand that there is a sweet spot between revenue maximization and through tax versus revenue maximization and the balance with volume. Right? So our continued advocacy, helps balance the narrative, and we have modeling that shows the state governments that, there is a balance, and that balance is quite critical. So, we don't have a way of factoring this in, but I think the experience that the team has and, what we've seen over the last few years, I think balances itself on the net, right? The longer-term advocacy that you were talking about, we continue to do, and we are, continuing to try and find models that will make it a win-win, for the government and a win-win for the industry. It's something that we do through our industry association, and we are also doing individually as companies. So that is a, mid to long-term strategy. I can't really say that it's going to play out over the next few weeks or months, but definitely it's something that we will continue to press on because, harmonized tax, maybe an inflation-linked, sort of price regime. These are all good for the industry and its growth.
Great. That's all from my side, and all the best.
Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Harit Kapoor from Investec. Please go ahead.
Hi, Harit. Hi, good evening. I just had one question on the near-term, kind of growth in P&A. The anniversarization of the BIO business, which was not there in a few states, probably happens only from Q4. And also, the fact that you've rolled out some of the renovations over the last couple of quarters, it means that, wouldn't this mean that some of the incremental growth that you saw this quarter could also, at least a portion of it could be there in the near term also, in the coming quarters as well, at least the next couple?
There will be, but innovations have now largely obtained the footprint that they need to obtain in terms of, distribution. But definitely there is a lot of juice in these, right? So just because we've distributed doesn't mean that it's penetrated all the consumers. So definitely our focus will be on juicing out, the benefit of all these renovation, innovation work that we have done. And there is a premiumization that is inherently happening in the market, so we foresee reasonable demand. There will be some normalization, having said that, so I think, our commitment to double-digit growth remains. Now, a little bit like I said, of filling the gaps with BIO normalization, ramping up the renovations has happened over the last few quarters. We expect that to normalize a little bit. But I think the guidance of double-digit top-line growth, we remain confident in.
Got it. And the second one was just a little bit more bookkeeping. This quarter there's been a significant, increase in the consolidated EBITDA versus standalone because of the RCB business. Do we expect over the next 3 quarters consolidated, profits to be slightly lower, given that some of the costs in the cricket business continue, but the revenues are upfronted in Q1? Is that the way to look at it?
That's right. That's absolutely the right way to look at it. Now, our RCB cost base is not so high, right? A lot of it is variable expenditure, but you're absolutely right? Some amount of overheads will continue to be spent throughout the year, whereas the revenues come only in one quarter.
Got it. Those are my 2 questions. Thanks, and all the rest.
Thank you.
Thank you. Our next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Hi, Latika.
Hi, Pradeep. Hi, Hina. So, some small follow-up questions to your comments. The first one was on Karnataka state. Is it correct to assume that the salience of this state in your overall revenues would have reduced, post the divestment of popular portfolios?
Absolutely right, Latika.
Is it okay for you to share some little flavor? Is it like a mid to high single-digit salience, or any rough sense there? Because we are talking about some very steep price increases.
I don't we don't have the numbers in our head, right? But the number is low, but we could figure that out. I think Shweta could help you out with that.
Sure. The second bit is just to get some color on or some feature on how your key states are behaving in terms of consumer demand. And we can talk about any large states for you where you are seeing consumption coming through much stronger than the others. Any qualitative flavors?
I mean, I would say that, Latika, if you look at, even historically, right? I mean, the southern states have always been less premium, portfolio oriented than the northwest, etc. So, I mean, in that sense, I think the pressure on popular and the lower end, you see more in the southern states than you do at the, other regional levels, right? On the other regions, I would say premiumization is playing out quite strong across. I mean, there is no one or two states where I can call out and say, oh my God, these are like really blowing out. I think we are seeing this pretty much across. I don't know, PJ, if you want to add any other comment.
No, pretty much. Latika, exactly the same thoughts. The premiumization is fairly broad-based. Now, having said that, to Hina's point, right, we made this point earlier, North is 60% of the national Scotch market, right? So on that high base, it continues to grow so well, etc. So the share of growth of North is obviously, the highest in the overall algorithm, right? So I think that should give you some sense of where the growth is coming from.
Thank you so much. This is helpful.
Thank you.
Thank you. Our next question is from the line of Alok Shah from Ambit Capital. Please go ahead.
Yeah, hi, Alok.
Yeah, hi. Hi, Tina, Pradeep, and Shweta, and congrats on a good set of numbers. First is, now that after COVID we are in a much more normalized environment. So just wanted to check from an overall category perspective, are you still seeing whiskey category growing faster than beer, or that was more like a COVID era where because of logistical issues, beer could not grow? So what's your reading on that?
I think beer has come back, right, quite strong, particularly after COVID. I mean, they were impacted quite badly, so they are growing. But, spirits continued the momentum and growth that we saw post-COVID. So irrespective of beer growth, spirits is on its own trajectory. And, what we are seeing is that consumers have really gone into experimentation and repertoire drinking, and this is a lot more after COVID. So, a lot of experimentation with cocktails, a lot of experimentation with white spirits as the base, a lot of experimentation with new brands. I mean, overall, I would say the spirits market remains very robust despite the, beer market coming back.
Got it. And
build up, Alok, right? Just building up on what Hina has mentioned. I mean, India is definitely a unique market, right? I don't think one of the, alcohol sectors will grow at the expense of the other, even though there is interaction. I think there is enough headroom, right, for both to grow and both to thrive, right? And that's what we'll hopefully see in the longer term.
Perfect. So from a normalized environment perspective, would spirit category in terms of, say, volume would have gone back to about mid-single digit kind of levels? Or what would that be broadly from an industry context perspective?
Spirit market, I mean, is at mid-single digit level growth, right? And I mean, if you look at the numbers, there is a little bit of shrinkage coming from Delhi, frankly. That would be a couple of percentage points of growth. But yes, I think short to medium term, I think mid-single digit growth is on and is probably continue to be expected.
Got it. Perfect. On the second question, so now this with respect to stock options, and considering it's part of the global conglomerate, that's why I had this question. So from a stock option perspective, is the management sort of given United Spirits stock option or Diageo stock option, as is generally seen in other MNCs? So that's why I just wanted to check on that. Thank you.
PJ?
Okay. No, so it's a combination, Alok, right? I mean, for the exec committee, it's a combination. right? They have stock appreciation rights of USL, and they have Diageo rights as well. Whereas for the next layer, for the rest of the senior leadership team, we by and large have the USL stock appreciation rights, right? So
got it, perfect. Got it. Thank you very much for this, and best of luck.
Thank you.
Thank you. Our next question is from the line of Karan Torani from Elara Capital. Please go ahead.
Hi. Thanks for taking my question, Pradeep, and hi as well. The first question was pertaining to IPL. So, this delta of what you've got in terms of the EBITDA or the PBT of 300 crores, can this reduce over a period of time? Because I think player cost will also go up and other costs will also go up. So, what is the number that we are broadly looking at, in terms of the overall PBT for IPL, say, 2 years from now?
So, Karan, I think I mentioned that, right? I mean, basically the IPL P&L gets set once in 5 years. The biggest driver is the central media rights, right? And the local sponsorships, right? So a little bit of inflation happens in our costs, etc. But so far, we have managed to do well by increasing our local sponsorship revenue from dynamic revenue growth management interventions, etc., right? So if you look at the 20-year trajectory or the 15-year trajectory of the men's IPL, I don't think our P&L has worsened in any year, right? It has remained stationary or it has improved in those steps of every 5 years, right? So that's the way we are looking at it, right? And obviously, we are trying to kind of do additional initiatives, etc., that hopefully give us some amount of, growth and margin as well.
Got it. So in a worst case, it will remain flattish. 300 crores of delta was the EBITDA.
Yeah, that's right. A lot can depend also on the team performance. Right? If we slip from 6 to 8, right, we will reduce further. If we move from 6 to 4th to 2nd, 1st, etc., then obviously that kicker of performance-related kicker comes.
Got it. That's fine. The second question was pertaining to market share and brands. So I understand that internally, your upper mid-prestige segment renovation is there. You launched in 80% of your target market, so the volume growth has been good. But in terms of external factors, can you highlight that, what is our ENA volume growth number? Is it in line with market averages? Are we gaining market share? How is the competitive intensity there? Just any color on that would be really helpful.
Yeah, we are performing very competitively on market share. So I think we shared this a couple of quarters ago with you. And certainly those growths are very, very robust from a competitive point of view. And we continue our trajectory. So like I said, I'm pleased with the, competitive performance, and that continues.
So is it safe to say that we are kind of growing ahead of industry average in the mid and upper prestige segment?
Karan, we never shared those numbers, right?
Okay.
Yeah, so we don't want to get into that, right? But what we can guide is, look, you get the earnings releases of both the companies, right? Pernod releases through the global earnings release, right? So therefore, you can do your own simulation. Pricing is fairly consistent for all players, right? Barring for the mix factor. So I think you guys can do your own modeling, right? And you'll get a reasonable sense. You'll reach a 90% accuracy level answer, which should be good enough.
Got it. Thank you, Pradeep. Thank you.
Thanks.
Thank you.
Thank you. Our next question is from the line of Tarbir Shahpuri from Nidara Capital. Please go ahead.
Hi, thank you so much. Congratulations for a good set of numbers. I have two questions, and the first one is a little bit abstract. If you could just maybe, talk to us, if the UK FTA were to come through in some form or shape, what would that mean for us over the next few years? And the second one is a bit specific. Is there any talk internally in the company to change the name from United Spirits to Diageo India? Thanks.
Let me answer the UK FTA first. Look, we are very pleased that this is on the agenda, right, in the UK-India talks. And we are optimistic that, something will come through. It's very difficult to talk of impact because that really depends on quantum and timing and phasing, right? There have been many discussions on phasing, quantum. We have absolutely no idea finally where it will net out. But broadly speaking, if the 150% duty was to go to 100%, there will be a 5-7% change in pricing because this customs duty is relatively a smaller portion of the value chain compared to the state excise, right? And if the basic custom duty goes from 150 to 50, right? You can see about 12 to 15% impact, and generally if the price changes by that much, that reflects in sort of volume uplifts of that kind of nature, right? So that's the kind of range we would imagine, but it really depends on how is it implemented, how much is implemented, and hopefully whatever gains here are not made up for by the states by charging something else. So there's a lot of ifs and buts, so very difficult to sort of calculate impact at this point in time. But hopefully, if it comes through, when it comes through, it should have a positive impact on the industry.
Fair enough. And I was curious if there are any talks internally of changing the name of the company.
Listen, we've explored it, right? It is a very long drawn process, and it means a lot of regulatory change, a lot of admin work. Let's put it this way, licenses, this, that, and the other. So it's something that is under review, but we don't have a firm sort of time plan for it.
All right, fair enough. Thank you so much.
Thank you. Our next question is on the line of Akshay Thakkar from Fidelity. Please go ahead.
Yeah. We'll make this the last question as well.
Sorry, just a couple of housekeeping questions. Just going to the annual report, the trademark fees last year were 0 versus a high number in the past. And then you had, I think, the distribution cost which went up significantly last year. I don't know if this is to do more with the change in, business post the sale of a popular portfolio, or was there something one-off in both these line items? I'm looking at the standalone P&L items disclosures in your annual report.
Sorry, Akshay, so I didn't get the question. You're referring to the annual report. The annual report will be a bit of a hodgepodge this time because of the divestiture, the slum sale and the franchising that happened in the middle of the year, right? So it'll be very difficult to correlate numbers on a comparable basis, right? Yeah. So maybe we should take that offline, right? I mean, we'll be happy to answer that, right? But if you could pick that offline, right? The numbers right now, I will not be able to read them, in my head.
I'll take that offline with you. Thanks.
Yeah.
Thank you. So I think we come to the end of, the session. And, as always, thank you very much for joining our call. And thank you again for your ongoing support to our company. It's always a pleasure to talk to all of you. And I look forward to doing that again end of next quarter. Have a lovely day. Bye-bye.